Right. So, ladies and gentlemen, please help me welcome the honorable panel members for the CXO panel session, and with a big round of applause for each and every of these esteemed leaders here. Joining us first, Mr. Ajit Menon, Group Chief Operating Officer from Vivriti Capital. A big round of applause to Mr. Menon. Mr. Menon, welcome to the stage. Mr. Ajit Menon, Group Chief Operating Officer from Vivriti Capital. Welcome to the stage, sir. Please have your seat. Joining next, Mr. Rohit Tiku, founder from Abhiyan Capital. A big round of applause to Rohit ji. Welcome to the panel again, sir. Please have your seat. Joining next in this panel, Mr. Nitin Agrawal, founder and CEO from AceN-Navadhan. A big round of applause to Nitin. Nitin, welcome to the panel. Please have your seat. Joining next in this panel, Mr. Prashant Ahire, Group Head Technology from IIFL. A big round of applause to Prashant. Prashant, welcome to the panel. Please have your seat. Joining next in the panel, we have Mr. Dheeraj Mittal, COO from Hiranandani Financial Services. A big round of applause to Dheeraj ji. Welcome to the panel, sir. Please have your seat. Joining next in the panel, we have Mr. Karthikeyan Krishnaswamy, COO from KreditBee. A big round of applause to Karthikeyan ji. Welcome to the panel, sir. Please have your seat. Joining next, we have Ms. Mandakini Kumari, Executive Director, Apollo Global Management. Big round of applause to Mandakini ji. Welcome to the panel, madam. Please have your seat. Joining next, we have Mr. Chandan Mohapatra, CRO from the Muthoot Group. A big round of applause to Chandan ji. Welcome to the panel, sir. Please have your seat. And now, the honorable moderator for this CXO panel, Mr. 𝐶𝐁𝐅𝐿 Tripathi, Executive Vice Chairman, Aadhar Housing Finance. Big round of applause to Mr. Tripathi. Sir, welcome to the panel. Please have your seat. Mr. Tripathi, all over to you. I think it's a fantastic, fabulous panel. Looking forward to a great session.
Very good afternoon to each one of you. We have got very power-packed panel. The introduction has already been given to you. The topic is very important. NBFC, you know that NBFCs have been playing a very significant role in the Indian economy. And they are actually, you can say, where the banking role stops, the NBFC role starts. And that's the reason the Government of India, Reserve Bank of India, nobody can ignore the NBFC. And during last over period of time, they have undergone a lot of transformative changes among themselves and reached out to the every nook and corner of the country. You can say the unorganized market in rural areas, urban areas, anywhere they have reached, and they have been able to carve out their own territory, their niche product, how they will do. And the performance you have seen in last about 4 or 5 years has been tremendous. Slight slowdown happened because of some regulatory actions and personal loan. Otherwise, NBFC has been contributing in each and every area, particularly the MSME development. I can tell you, there are 64 million MSMEs in the country. 99% MSMEs are micro units. And these micro units are not able to get loan from anybody else. In fact, this is the NBFC, they have understood how to address the requirement and they are doing it. Today, MSME sector, which is the largest sector in the country, not only in contribution to GDP, but otherwise also the MSME sector only they have got 40% credit from the formal segment. Otherwise, they are mostly informal loans they are taking. So that's why the massive scope available for the NBFCs to grow. That's one point I tell you. 46% contribution to GDP comes from rural areas. And only 8% credit flows goes to rural areas. That means the rural areas are going to be the hub of lending for the all NBFCs. Because they are known with the help of technology and with the help of all transformative changes, the fintech involvement, they have been able to underwrite these loans and know them better and recover them better. The Government of India and the regulatory support is always there. You see, the Mudra Yojana has been one thing, Jan Dhan is one that has created a lot of market for them. And apart from that, the credit guarantee fund trust which Reserve Government of India has implemented, that is also a game changer. India is take lot of alternate data available through digitalization and everything. That is the helping these NBFCs to underwrite these loans effectively with operational efficiency. Reserve Bank of India has also brought many supportive changes, though lot of transformation, and to see that the sector remains resilient, the Reserve Bank of India keeps on bringing control system as well as the support system, both they are bringing. And the priority sector ambit, lot of innovation which RBI is supporting. Recently, the ULI, Unified Lending Interface, which RBI is going to bring very soon. All those supports from Reserve Bank of India is coming. It is not that they are trying to control only. So therefore, NBFC has got a brightest future in the country for themselves. The only challenge which comes for them, that out of about 9,500 NBFCs, many are inactive, but those which are inactive, only 55 or 60 NBFCs are having loan book of 10,000 crore plus. Majority of them are under 1,000. They are enjoying light touch regulation from RBI, but they have the potential to grow. And a lot of challenges they also face with regard to the liquidity system, because their liability profile solely depends on the banking system, because capital market to the new NBFCs is not going to support them. So there are a lot of efforts are to be done. So to all these opportunities, the contribution, the regulatory support, government support, and the massive opportunity which I discuss available, to discuss all these nuances, we have got a very power-packed panel, and they are a couple of them are founder, a couple of them are CEOs and CXOs in the company, and they are technology experts. So they are here to probably discuss all these important things which are going to impact the growth of NBFC and how they have to navigate the market further and support the Indian economy to grow. So I will start my question from my esteemed panelists. First of all, I take up Nitin Agrawal. In last 60 years, I think 1990-60 onward, the NBFC system started evolving, and thereafter, lot of changes has gone. Latest being the classification through base layer and all that, so much of things. So now you tell me the system has evolved so much, and it's an important pillar of economy. What are your views about the growth and stability of sector in next 10 years?
Hello. So very pertinent question, quite honestly, because NBFCs are also very crudely called as shadow banks. So I would say that the responsibility here is to do where the banks leave it on to us, because banks are plagued with a situation where they have to operate within a very small margin because they're the custodian of depositors. Hence, taking the business risks and credit risks, technology risks, and all new risks around processes and going the last mile, the responsibility then lies on us as NBFC guys. And therefore, I think the responsibility has been and would continue to figure out the last mile much better, both in terms of technology, processes, people, and deserving pockets of credit where the credit has not really reached as yet. And we are definitely not looking at any other financial service, be it deposits or insurance or pension and other things. That scope remains a little bit of shadow covered for now. So since the mandate is only credit, I would say last mile, and expense of repetition, I would say it's both for tech, for processes, for people, and deserving pockets of credit.
Rohit, what is your view on same question? How do you think about growth and stability in this?
Yeah, so honestly, Mr. Tripathi, you yourself answered this question when you said that the growth for the future of NBFCs is very promising, and I just cannot but agree. Not just because I represent an NBFC, but because we sincerely believe that's going to be true, and simply because the NBFCs have an opportunity on riding on the India's growth momentum, right? So they have a unique opportunity where they can ride on that momentum, and they can also contribute to that momentum. And in fact, I think the responsibility and the opportunity right now is actually to contribute to that momentum of the growth. Like you mentioned, there are almost 6 crores micro enterprises. Most of them is situated in smaller towns, tier 2 to tier 6 cities, who do not have access to credit, and they contribute almost 40 to 50% of India's GDP. Unless they get credit, right, and unless they grow in their business, they grow in the journey, India's journey from 3 trillion economy to 5 trillion to 8 trillion just cannot happen. So it is inevitable that the MSME segment or micro segment has to grow in India, and the NBFCs are uniquely positioned to actually push forward that growth. And what we have witnessed in the last 4-5 years, while NBFCs in India have been operational for the last, I think the oldest NBFC is 150 years old in India. And they have played a stellar role in reaching wherever we have reached. And the last 7-8 years have been actually transformational, because it has created sort of a disruption in which the expertise of NBFCs has been viewed. See, typically the NBFCs have been viewed because they have a domain expertise, right? So you had traditional NBFCs who came with a domain expertise. So all large NBFCs in India have one core domain, right? So whether it's a gold loan, whether it's a commercial vehicle loan, whether it's a consumer durable, so all of them had their core strength, and that was the domain expertise. Now, in the last 7-8 years, technology has tried to make its case that is it a separate domain, right? So if anybody has a technology expertise, does he qualify to be an expert in lending? So that's a question which has been asked in the last 10 years. It has met with certain differing viewpoints, succeeded, it's failed, like in all new things which happens. Right? So you do something, you fail, you move to one extreme, and eventually you find your right path. I think that's going to happen in coming years, and I believe that the growth is going to be majorly fueled by NBFCs, because there are 4 things, in my opinion, which are very which have happened, and which have actually lowered the entry barrier for NBFCs to succeed. First is, and technology has played a role in all of them. First is creating access to markets, right? Today with digital, it's much more easier to access much larger market. India has 80 crores working population, and India has 70 crores smartphones, and India has 50 crores UPI holders, right? So these are the people who are rightly amenable to be approached and accessed through a digital channel. Right? Eventually the fulfillment can happen through physical, we can have all of separate discussion. But the opportunity to access this market has been created with the help of technology. That is the first thing. Second thing is the availability of data, which is available, and the creation of a digital public infrastructure, which has helped create the second barrier, has helped erase the second barrier. That is, how do you underwrite, right? So that is the second barrier which has got removed. Third barrier, which is very often not given its due credit because of technology, is that co-lending has solved a lot of capital problem for the NBFCs, and co-lending would not have succeeded without technology, right? So that is something which people don't appreciate it, and I think that's going to play a very big role going forward. And fourth, in India is going through a lot of changes in the economy, in the sector. There's a shift from income segments happening. And large specific domains are going to get created of expertise, right? So the size of that segment is so huge that it makes an immense case for a very specific domain, specific NBFC to emerge and be successful. Yeah.
Thank you, Rohit. You have covered so many things in one question. I will request panelists to be slightly brief, because we have got a big panel and many areas we have to discuss. Ajit, coming to you, the inclusive growth of a country is not important if it's not inclusive. And the marvelous contribution which NBFC has given, the real financial inclusion achievement done by the NBFCs. And they are powering the economy also and doing financial inclusion also to reaching underserved population in urban and rural areas. So now I request you to kindly share your experience about that. Unless a micro unit becomes a small unit becomes a slightly much bigger unit, and then medium units, This is not that 2047 dream you are going to achieve. So now, what is your experience? And quickly you tell me how it is possible.
I think, like Rohit mentioned, and I'll keep it brief, keeping in mind the time that we have. So, Mr. Tripathi, I think what you're trying to do is trying to get the underbanked or partially banked into the banking fold or the credit fold, so to say. So, there is a certain strata that is not touched by banks. There is a certain strata that is touched by certain NBFCs. Then what we realize is we have to go after the mid markets because that's where the opportunity lies, right? Across asset classes. Now, how do you push them? You're primarily trying to help them and underwrite them in multiple ways. Technology plays a huge part. How do I finance them? I do a financing on a billable event. How do I ascertain a billable event? I have a tech stack which identifies whether the billable event is true or no, right? So and then I do a lot of cash flow based financing. So if you see, there is an emergence of cash flow based financing over the last 5-6 years using technology as a big stack. So what does a small player need? A small player needs access to credit when they need it, right? Now, just-in-time capital is something that you could call it, right? How do I do that? I have to integrate very, very smartly into the ecosystem to understand their cash flow cycles so that I'm there when they need me, right? Which is what a bank today is trying to emulate, but they're not, because that's not their mainstay. Because for a bank, the bread and butter lies somewhere else. But for a mid-market player, the bread and butter is this. And when you go really hammer and tongs with your tech stack, I think you are able to solve it. So it is a single-minded focus. Rohit also briefly touched upon co-lending. Co-lending as a practice, so to say, emerged about 5-6 years ago, right? And it's primarily also to de-stress your balance sheets and then provide a lot of firepower to an end consumer across various asset classes. It started with personal loans, but it is now branched out to multiple asset classes: commercial vehicle financing, SME financing, consumer loans, two-wheeler loans, you name it, right? Even LAP for that matter, right? So that's where I see that penetration could go up with the advent of technology. Banks are not trying to emulate it is because that is not their mainstay, as I mentioned. But the only way to expand this is to actually go hammer and tongs and go with a single-minded focus, Mr. Tripathi.
Dheeraj, your company is already doing the small ticket size loan to the MSME. Now you have to slightly add that how you are going to ensure that and that the credit reaches to the all segment of people, and what is your experience about that?
See, I'll just like to add what other panelists has said. Yeah. So the basic point where we come from is that the 8% penetration of credit as of now in the rural and the deeper market. So can we reach to that deeper market more effectively, more efficiently? And still, if you go in those markets which we're talking about here, is a customer has to walk to a bank for a loan if he wants a loan. And the NBFC provide the differentiator, we go to the customer doorstep. Can we solve that problem rather than customer walking to the bank's doorstep to a NBFC walking to the customer door knocking him for a loan? And the situation is still there in the rural on a very penetrated market. I can tell you because our 80% branches are into tier 3, tier 4. And getting a loan, and if we can recall, first credit line given to us except for credit card, most of the people in these markets have got a first loan from an NBFC. And that's the reality of today. We call ourselves the feeder to the bank. In terms of once customer graduate to a certain level, then he goes to a bank, and obviously bank sees his credit bureau, other history, other data points, and try to take over that customer or graduate, as you rightly pointed out, from an MSME to an SME and henceforth. So that's the whole logic that NBFC is going and doing that last mile delivery. And that's what makes it differentiator in the whole game with the help of tech. Tech always call that in an NBFC play, tech is an enabler, which can help me reach out to the customer much faster, much effectively, and much just-in-time case, which you just mentioned out. So the whole point is if I can reach out to a customer when he needs it, when I can solve the problem at his doorstep, and what he needs at that point in time, that really will solve the problem for those credit penetrated market, which is just 8% as of now. If we can get just double the market also, we'll reach around 10 to 15% of credit penetration in those markets. So that's what there is a huge scope for a NBFC to penetrate in those markets and do that and use the technology to the best of their ability. Each NBFC is trying to do that. But our logic is we call ourselves a phygital company. We don't want to do a digital and all the way using all those components, which is more about a talking terms these days in the market. Whole is how holistically use technology to optimize. The technology has to either optimize my sourcing process or optimize my cost or optimize my turnaround time. And that's where we're trying to drive and reach out to those customers. Thank you.
Well said, Dheeraj. Karthik, your NBFC is slightly big, but majority of the NBFCs are very small, 100 crore, 200 crore. Do you think how they are going to sustain in long run?
Thank you, sir. Good afternoon to all. So, see, this is a bit relatable because we were also in this journey in the last almost close to a decade, right? As in when we started off with, the capitalization was much lesser. But couple of things that has worked out in our favor is that there was also a small amount of luck in the sense that we started whatever the product that we are giving in terms of personal loans to mid-income India at probably the time in which the digitization was happening, right? But if you look at it now, there are a lot more other options available, right? As in, so identification of the market is definitely very much important, right? We were initially, we had only one partner, probably, let's say, our own app, which was funneling the loans to us kind of things. But now we have so many partners who are basically giving us the loans and who are also, we are building their book in terms of co-lending, etc., right? So partnerships has played a very important role also, right? And that if you look at technology, technology is just an enabler, right? As in, it is not basically the major differentiator. We are just digitizing the processes that was there, and we identified that and we were able to digitize it effectively, right? And so these are some of the things which helped us in growing from what we were at a very small, much smaller size to a decently big NBFC which we are right now. So idea is that we need to capitalize on the opportunities that are available, right? As in each and every NBFC that is there is uniquely important and is in a unique position because of the very fact that there are only 10,000 of them in India, right? As in a population of 1 billion people, 10,000 of them are there, and you multiply services that are there, probably 5 services or 10 or 6 services in terms of the loans that a customer might take in this thing, let's say a housing loan, a car loan, a couple of personal loans, a two-wheeler loan, etc. You probably would end up 8 loans in a lifetime. So that's almost like maybe 4 to 6 billion loans that will go into the system, right? And if you are able to capitalize it, I think you are in for a good growth because India is digitizing in a massive way, thanks to the government, thanks to the regulations, etc., that is being brought about. So both it's an opportunity basically in a changing landscape. So I would say that we need to capitalize on the opportunities available, sir, actually, using technology as an enabler.
Yes. Thank you, Karthik. Actually, the small NBFCs, for them, co-lending is the best model. With less of a capital, with less of a borrowing, they can survive and be profitable. Mandakini, I am coming to you now. And the theme of the topic is also the paradigm shift in NBFCs in lending to small ticket size loan, far-flung locations, is brought by technology. You just elaborate how this happened. My earlier speaker have touched upon, but you being a technology person, you can give detail for that.
Sure. So, am I audible? Yeah. Okay. So before going why we need all this, first thing is everyone has talked that most of the NBFC has a ticket, small, they have not grown up to the scale. So first thing is operational cost. We have to reduce the operational cost. To do that, we have velocity of the getting the customer is important, and third one is user experience. So these are the 3 key parameters we should think before thinking or jumping towards the technology. Now first of all, user experience. These days, even you go a small village, most of the people has a smartphone. It's okay, old smartphone, second-hand smartphone, but we are, we have the advantage to have the smartphone and 3G, 4G, 5G data. So we have to think omni-channel applications. Like if you go old days, we have bought on the shelf couple of product from the market, which is not capable to extend for the omni-channel. So that's the one key thing we should think about omni-channel. Again, bringing the AI, ML and all real-time communication, so that will improve the chatbot kind of things to user experience. And so there are 4 parameters I can think of is important to onboard a customer and disperse the loan. One is collecting the data information. We should have like technology, should have like collecting minimal data from the user, because we are talking urban and urban both, all kind of users. So we should plan like minimal kind of data entry from the user. That's the step 1. Step 2 is if they upload the document, we should extract as much as information from that and see how we can refill the data. And 90% accuracy as of today, technology is capable to get the data from the different kind of document and pre-populate, and almost 90% accuracy. So we should see how should partnership with different technology team, like as we saw the MapMyIndia, or there are different platforms where we can take the data, pre-fill. And third is the credit. So how we should see the credit or risk scoring. And fourth is the disbursement. And fifth one is the collection. So how we should enable all these using technology, either do ourselves or don't reinvent the wheel, partnership with different technology teams, or different vendors for collection. So there are different things available in the market. Only thing we should see it's buffet, build and buy, or we should see on the shelf how we should take it. So there are different ways we should rethink again, and don't go like traditional way what we have been doing. So that's what.
Thank you so much. I think well articulated. Prashant, you have been all along in the technology only. So you have seen the entire journey in last about 15-20 years. Digitalization is key to survival, and India has made a lot of strides in the globe in digitalization. How this has made front-end and back-end process easy and costly?
Thank you, sir. My whole panelist has already described. NBFC required a cost efficiency and operational fulcrum. This all is possible with the digitalizations, with the technology stack. Okay, I will take a pause and I will try to tell you that a good example like banking. Now you can see the Citibank, you can see the Singapore banks, they are branchless, okay? They have everything digital. The era is not far where NBFC will be branchless. That's what I can tell you, and that is possible through the front end and the back end. I will give you the more example how the front end will, using the technology stack, will ensure that entire customer life cycle is handled using a front end. We generally do a customer either comes through the web or through the mobile applications, okay, or through the social medias. We as a technology person has to ensure that the customer life cycle right from his onboarding, eKYC, his credit rating, even now guiding him on the filling of the forms using the large language models or live chatbots, the omni-channels what we are trying to say. So we have to integrate all the required fintechs into the front end in a such a way that we can auto direct to our customer to complete his journey till the loan processing is happens. Same the back end, we should able to integrate our back end error free, human free. That is possible by using a technology stack like robotic process automations, RPA, business process managements. We have OCRs, we have the VRAs. So the back-end process should be ensure that the minimum human interventions that will give us all of us the cost effectiveness and error freeness that increase our operational efficiency and reduce down the dependency on a human touch. Okay, the digital touch gives you a efficiency which reduce your cost. That is what the my business guys, my operational guys looking for. Okay, this is how the front end and back end we have to integrate properly. Apart from there is a important stack on that is the technological stacks which we put all these operational, that is our on-premise or our cloud infrastructure, where we must able to spin up our applications and our infrastructure with the scalability, agility, with high availability, okay, with a cost effective. We have to try to deliver this experience with a minimum cost by adopting a license-free products, okay, open source product, so we can able to give a very good cost-effective service to our customer. Thank you.
Thank you, thank you. Frictionless credit is the key these days. Chandan, coming to you, I mentioned the Reserve Bank of India post-IIFL crisis has brought a lot many regulations, directions, modified directions for the NBFCs, the digital lending, FLDG, a fair practice code, so many things have been brought. What is your sense for these guidelines, whether these have been able to strengthen sector, or you find these are obstruction in our growth?
Thank you, sir. Good afternoon, everyone. Maybe I think what all of us kind of spoke in last 15-20 minutes, I think the technology has been really disruptive. And the fact that we have reached so far, we have actually crossed 3 trillion economy was, I think a decade ago was beyond our imagination. And I think the sole factor which has driven all this is disruptive technology, right? And when you're talking about disruptive technology today, fortunately, it is considered in a very positive annotation. What stops it from moving from positive to negative is the fact that there is a control, there is a check in place, right? Otherwise, for any unimaginable growth to happen, it is imperative that it has to be structured and regulated. So that, because entire thing that we're talking about, customer is at the core of it. And there are so many usage of the data. A friend of mine spoke about the data privacy and all that. So a normal customer who is giving a consent for taking a loan, if he is not aware about what the data is being shared about himself or herself, what is the usage, and what is the benefit that he is ultimately getting to get out of that data, I think that creates a bit of opaqueness in the system. And precisely why, if you look at last couple of years, RBI has been extremely proactive in terms of bringing out lot of regulations, checks and balances, and they are extremely right and on the spot, if you ask me. Couple of example, if I look at, so if you look at GDPR norm or even US regulation, we are always there. We were all thinking as to how come my number is shared with so many people are calling us for loan, this and that, so many things are getting shared on the net. Today the DPDP Act is on the verge. There are so many changes that RBI has brought in. Say for example, so far we are able to give the check and all that regulation which got changed, which said that you can only charge the interest only from the date that you have actually parted away with the money or the money has reached customer's account, right? This is a very simple thing to talk about. But if you look at the impact that it has actually on the customer is humongous, right? And these are the kind of clarity that is needed at this point in time. So these two things has to go in hand in hand. One, technology has to be continuously disruptive and it has to continuously keep adding value the way it has been adding. But at the same time, I think the fairness to the customer, entire transparency in the system, bringing a lot of regulation so that maybe in the short term we will feel little not so okay business, maybe because the business has taken a hit or maybe the profitability has taken a U-turn. It's all fine, but we are all here for a long run. And in the long run, if you want to reap the benefit, the right set of regulation, checks and balances have to be in place. And I strongly feel that they are just in time. And some of those regulations were like overdue, and hence I think they are extremely imperative that we kind of operate, but within the set of regulations that the governing body wants us to.
Chandan, very well said. Reserve Bank of India is wearing multiple hats, not like other countries where they are controlling inflation only. And whenever the irresponsible exuberation takes place, RBI has to come into picture because strength of the financial sector and growth both are important. So RBI regulation which may pinch somebody at one point of time, but every regulation which the RBI has brought that has been accepted well in 6-8 months time. So I think we must admire that. Now in second round I request my all panelists to confine to 2 or 2.5 minutes because time is very less. Many questions already answered. Rohit, coming to you, how it is critical for NBFC to keep innovating alternate scoring model, digital KYC to maintain competitive edge?
Hello. Well, I generally tend to get scared when innovation and NBFCs are put together, because I think the mandate for NBFCs honestly is not to innovate, right? Is to adhere to the basic risk principles of lending which have been established over thousands of years of lending, and just execute well, use technology. But I generally feel that there are a lot of people who have done innovation around the principles of lending and landed themselves in trouble, especially when it comes to innovations around regulations and innovations around this thing. But yes, I think there are enough technological solutions available now, right? And which is to the benefit of the NBFCs to use them prudently, to ensure that the risk management that they have been traditionally doing is strengthened, not bypassed. The regulation which RBI wants them to implement, they are able to effectively implement those regulations and not just bypass those regulations. So I think it's extremely important that the available solutions are used to strengthen their risk management and compliance.
Nitin, fintech have democratized the financial services and they are constantly innovating, as Rohit has just mentioned. Do you think the NBFC and banks are required to collaborate with the fintech instead of treating them as their competitor? They should think them as their friend and guide and collaborator.
Well, sir, I do see that paradigm shift in the last 3-4 years. 4 years back, there were silos to say this is bank, this is NBFC, and this is fintech. Now I would like to believe that the margins are blurring. And in most of the conversations that I'm having with senior bankers, most of the people are mentioning that wherever there is agility to design new solutions, fintechs and banks should collaborate. Having said that, there are very tough guardrails for banks to manage it, both on the InfoSec side as well as customer protection side. And I think I was recently going through an SBI document of 19-pointer detailed InfoSec guidelines on what they require for fintechs to be tied up. I think it's getting more and more formalized. This debate was perhaps still very loose about 3 years back. Today, I think all three are collaborating. Well, in fact, between NBFC and fintechs per se, I think the lines have completely blurred. In lending space, most of the fintechs are adopting NBFC licenses wherever they can get it. And most of the NBFCs have started mimicking fintechs. So I don't think there's lines left now to blur.
Ajit, I am coming to the important question. In lending space, the credit, operational, fraud risk is always there. And in a small ticket size loan, in the informal segment, these risks are very common. Now you can tell me how you will mitigate these risks. These risks are inherent. We can't stop business. We have to mitigate. Just give your out of experience some thought on that.
So I think risks have to be managed like Chandan manages risk. for Muthoot, right? And now the point is, risks can't be eliminated. Risks have to be managed. So your question was particularly towards co-lending or risks in general, Mr. Tripathi? The risks that you mentioned. Right. So the way you go about doing that is to get a lot of tertiary data. So the risk management is technically not changed. It has remained traditional, but what you now have is you have a lot of third party data which helps you triangulate early warning events or early warning signals much before the event could take place. It's like Tesla, for example, the car manufacturer. There was a video where a Tesla car was actually on autopilot. It could predict the crash which was about to happen 3 minutes later, and it did. That's because it predicted the speed of the vehicles ahead of it, and with 98% certainty or 99% certainty, it actually braked. And it braked because there was an event that was about to happen, and it happened. Right, so that's because there is a massive amount of data that is being thrown at the edge computing, right? On the edge computing, so to say, right? So a lot of computing happens on the edge, right? With all of that, this is also creeping into financial services. So today you are amidst data. You have to make sense of all of this, and have your models give you early warnings much before the event could take place by heat maps, right? So it's not your traditional way of managing risks. It is evolved, and it is evolutionary in nature. So unless whether it is banks or NBFCs which are able to keep up with the change, they will not be able to manage risks because risks are emerging. There are newer kind of risks. There could be regulatory risks emanating from two co-lenders coming together, not following guidelines. There could be a certain risk emanating from a certain asset class. There could be an onboarding related risk. So it is a 360-degree view that you require with tech at the center stage, being an enabler to give you early warnings. That's how modern financial services companies have to manage risk. And banks are emulating it today.
Karthi, quickly, you tell me that what are the challenges faced by the NBFC? Just tell me in maintaining growth momentum.
So, as we discussed earlier, right, I think with different sizes, different challenges, right? So when we initially started with, we were looking at more in terms of disbursals and all those things. But over time, what happened is that we learned that the AUM needs to be grown. So what that means is that it's a total paradigm change in the way the business is run, right? So we had to develop different products, etc., and all those things. So that was one challenge, right? Then the thing was that we wanted to bring in a lot more partners into our ecosystem, right? So then we had to change from a closed system to an open system, right? Where multiple partners can integrate, and we also can integrate with multiple partners, right? That was there. The third thing, which was kind of unique to us, was that we, as in the number of loans that was disbursing itself was at a very high rate, right? Probably we disperse almost close to a million loans monthly. So all these systems, some of these LOS, LMS systems were not tuned for that kind of volume also, right? So then we had to face those, solve those tech challenges, right? Then if you look at it, maybe this is related to NBFC, but if you look at the platform side of things, it is more in terms of, let's say, understanding basically how to, as some of my other panelists were saying, how to derive the data out of these things, right? So as you grow, the challenges change. As in, for example, when you have 5,000 customers coming to your platform, you can run the analytics in a smaller system, right? But as you grow bigger, the requirements change. The idea is that you need to identify what are the bottlenecks at that point in time and get in the corrective measures there, and also have an idea of the growth that is going in, and bringing systems and processes and basically models, etc., right? Whatever is there ahead of time, so that you don't face a crunch when you reach that point, right? So these are some of the things. I think in the interest of time, probably I'll say, so technology as one thing, a whole integration, open system, integrating with partners, etc., right? And planning ahead, and then strategizing as to what are the systems and processes that are required as you grow and mature. These are some of the challenges that are there that needs to be addressed, is what I feel. Yeah, thank you.
Prashant, cloud service provider and cloud journey, these are very important. Can you just tell me how to implement all this?
Come again, sir.
Cloud service providers and cloud journey is role of implementation of cloud service provider and cloud journey.
Thank you, sir. So, cloud plays a very important role for your go-to-market strategy. Okay. For any NBFC or any bank or any fintech, if they want to roll out their product, okay, there is either you should be ahead of the market or you should be on time on the market. If you are behind the market in implementing and adopting that, that means you will lose the opportunity as the opportunity cost is very high. So, to achieve the go-to-market fastest rate, you have to ensure your deployment cycle, right from your infrastructures and your applications, should be ready with a minimum time. That is possible with a cloud service provider, that is CSPs, okay, where you can able to adopt your infrastructure right from the IS, infrastructure as a service, platform as a service, even software as a service, okay, where with a minimum time, near 0 times, your infrastructure will be ready and you can able to deploy your applications and making it available for your customer. So cloud is a very, very important factor, but nevertheless, there is a TCO, that is a total cost of ownership, to be taken care, to be compared, and we need to adopt along with the cloud journey. It should be a hybrid journey, I will recommend, being a technical guy, because the more, if you compare the TCO with respect to the 5 and more years, you will find a hybrid approach is a more efficient and more effective. So you try to make your data savvy and data hungry product on premise with some virtual products, okay, hypervisors, and adopt some of the lightweight products into the cloud base. That's my take. Thank you.
RBI has been continuously fostering innovation in technology. They already have a regulatory sandbox, encouraging use of AI, ML. Prashant has just use of cloud. AI and ML requires more space. As I understand, as a non-technology man, how do you foresee that?
Sure. Maybe I'll take just one step back, keeping in mind that there is a time constraint. So maybe a decade ago, the term of fintech or digitalization was unheard of. And today I think these words are, most widely used words in the BFSI space. What does that lead to is that there was almost zero presence of fintech. Today there are about 10,000 odd registered fintechs in the country. India has become the global hub of fintech activity. To the extent that some people have started calling it as tech fin, because tech is kind of driving everything at the core of it. But everyone in the financing industry have seen a massive tech coming into every aspect of our lending. But with all this thing in place, we have not even covered half of our mark where we're supposed to be. Like sir, you rightly pointed out at the beginning, in India, registered MSMEs are about 64 million. And so far, we have not even covered 45% of them with all this tech in place. And hence, maybe from here, the way I look at it is that RBI is going to play two very critical roles. One is that the fintech, the way it has evolved in last 8-10 years, it is going to go double, maybe triple. So all of us are going to see massive technology coming in on our way, maybe in a couple of years' time. So RBI is going to play, at least my understanding is that two very critical roles. One is of course to kind of bring in some structured rules and regulations so that there is a fair play for everyone how we want to operate. Two, I think the governing body is also going to be kind of play a similar role alongside the tech team as to what kind of new technology that can come in. Say for example, the latest development is the CBDC. And maybe through the NPCI platform, the UPI, BBPS, I think all these are nothing but the regulators' initiatives to kind of foster the financial growth. And hence, I think that it is twofold. they are going to regulate for sure, because I think it is about imperative that we kind of stick to those rules. But at the same time, RBI is going to play a alongside role to kind of tell us, look, these are the new technology which we are now bringing to the table. So why don't you start using and kind of start penetrating to the market?
Chandan, just to take forward what you have said, I will go to Dheeraj. Reserve Bank of India Governor few days back he announced that unified lending interface that is ready now, and very soon that will be in the market available to all players. Primarily for the farmers credit and the MSME credit. That will give a frictionless flow. As he was mentioning, the RBI should come. You see, the India Jan-Dhan mobile trinity, that jam, then UPI has made wonders in the world, and third is now going to be ULI. So RBI governor used the word now the new trinity, jam, UPI, ULI. So how do you think that ULI is going to make our life more easy, help us to optimize the cost and do the more loans? Quickly, in 1 or 2 minutes, please cover.
Yeah, thanks for this question, because it's a very interesting thing to be. We live in an interesting time where the regulator is driving innovation in our country. We should be thankful to them. If you see 15 years, 20 years back, who was aware of there will be something like an UPI which anybody in the country can use, even a sabzi wala to a pan wala. And now we are doing UPI transaction. Who thought about UPI, you can do a UPI transaction using a credit card? So we should be very much thankful to the regulator who's driving the innovation. And that's what leading to these impacts in the society where a lot of fintechs are coming. Because once a regulator starts, in other countries you see the private sector innovates and then somebody adopts. Here in financial sector, what is happening is the regulator is driving the innovation. And that's what the universal lending platform is all about. I was fortunate to meet them at their stall at JFF, so I can put some light on that. They are building a lot of APIs using that ULI. They've already completed 9 states data where they can they've built an interface where you can call lend records of 9 states. They can convert them and provide you through an API. That's what they are trying to drive. They are trying to connect with the milk federation to collect the data, and almost 15 milk federation in some of the states they have getting those data and providing to the NBFC or bank at large. So the whole thing is that you think as of now they are working on a B2B, but sooner it will be available at a B2C product. It will take some time, but it will be available. But it's a boon to us. Today, I know just in with regards to MSME, I use that particular thing. I do go to a valuer and search a record for 13 years. And I pay a hefty fee to a valuer to go check those lend records and see. And I waste 3 to 4 days of my precious time of a lending. And if I can get that information at my fingertips using an API, and that too in my language, in terms of they are also trying to convert those vernacular language document to a readable English format document where you can put a rules and do logical valuation of that property. This is going to be a hell lot of a shift in the entire approach of lending with regards to MSME and especially a retail agri or a agri credit. So I see that that's going to be a next transformation next 5-7 years. If we are able to crack that to a retail space or even a B2C space. Once it comes to B2C, it will give a consumer hell lot of choice to select who can be his lender and how he can take a a loan on a fingertips by he choosing a lender rather than a lender choosing him. So that kind of a democratization of credit is happening in the country, and I am thankful that regulator is driving it. So I'm really very positive about it, and I am hopefully if we can tap on this opportunity, it will be a big opportunity where we can double up our credit penetration in the rural sector. Definitely in next 10 years.
Mandakini, there is a feeling across most of the professionals that in next 3 years will be more transformative in technology powered by Gen AI, ML, other tools than what we did in 30 years. What's your view?
Sure, sir. Thank you. It's really great question, and I'm very much convinced on that. As all the panel members said, like one is, as Ajit mentioned, credit and risk, automation, innovation, cloud, our regulator. So there are already ecosystem has built one side. Now next gen is giving on top of that. So if as a dev, like I'm tech, core tech, and if you'll ask me 3 years ago, I had to key in the data. And if I have to automate, say, some old credit report or ESG report, it's not possible. But as of today, like we have evaluated a lot of like open AI. There is a enterprise edition where your data will not go there to the open AI. Then we have Vertex, Google Vertex. Then we have IBM Watson X. So being a NBFC, our core strength is finance. We should leverage other tech who has already developed the Gen AI, and we should see that, okay, with this, how can we leverage that? And we are like, we ask, so I work with Ajit, and I was asking, your team, operations team has to enter data properly, otherwise this will break. But now that's not. Okay, you create the credit report, you create the ESG report, you give us in the PDF format, and then I will give you a structured data. So we are going now, it's not one way. I'm giving you multiple way as a tech person, and we are evaluating a lot of product in the market right now which is available, and we can see, compare for which use case what product is suitable. And then we can see either we will use this for this purpose. So maybe we have, for one example I will take you, being a big organization, we have more than 200 vendors, and when invoice comes, it's not possible for us, or it's a big operational cost to check that, okay, this validity, this amount is agreed. We have to check, cross check if it's manual. Now we are giving that, okay, this generative AI, that this is the statement agreement and this is the invoice. Is it okay? Go, no go. So it's just, I mean, I'm not talking from today. If we are talking NBFC 5 years, automation, digitalization, but what's about old? So we are doing digitalization for old data, which help us more machine learning purpose, and not pushing back to the operations team that, okay, this is my way or no way. So tech team is now no more my way or no way. There is a lot of way.
Mandakini very well said. I have been seeing from last 5 decades the financial sector, and I can tell you, today crores and crores number of transactions you can process with a click of button, which was impossible 20 years back. About 14 years back, neither there was a bureau, nor there was GST data. Whatever the chartered accountant was certifying the balance sheet, that was the only you have to accept. Nothing you were doing, firing in the blind. And that's why today I think the days are bright. Every year comes with a lot of innovation, lot of cost optimization and growth, provided we use the entire data, entire system very judiciously. Now last question, 30 seconds, my all CXOs to reply, that what initiative as a CXO or founder you will take to make your NBFC future ready? Ajit, when you start from that side and it will end on the...
I'll quickly add, I think we're running out of time. We ran out of time already. So 15 seconds. I think you will have to, so it's all tech, centered around tech. So you're going to look at very large valuation companies. The valuation will be large, but you will only have 50 people. Right? You don't need 20,000 people to have a valuation of $5 billion. So that's what's going to be the advent. You'll have very small companies by head count, but you'll have large AUMs, right? You'll have large businesses, which will be technically branchless or phygital, like he said, which would also mean the technology will be doing all the heavy lifting. From underwriting to disbursements to reconciliation. So you don't need an army of operations team members sitting in a very large building, running up a lot of electricity, power, etc. All this will be done by code, low code, no code platforms today enable you to do that. So the future is where tech will be center stage. and we'll all be around it. And businesses, or the moat, so to say, the competitive moat will be technology. And it'll be open source, right? So it is all up to your imagination. The moment you run up your imagination, build a particular workflow which enables you to distribute in the most in a path of taking the path of least resistance, that will be your moat. So you don't need large buildings, large offices, but you can still have very large businesses.
Very quickly.
Yeah, just two things. I think the way we are planning to use technology for NBFC for future is that first is to create access, reach newer markets with the help of technology, and second is use technology to create processes where the risk management is tightly controlled, where the operation controls are tightly controlled, and you are less people dependent and more system and process dependent.
Well, I would just say, sir, लगे रहो, सही दिशा में जा रहे हैं, बहुत कुछ हो गया है, बहुत होने वाला है, लगे रहो.
Keep innovating.
Yeah, the punchline, as you rightly said, lage raho and keep innovating are the touch points that once you start do, and also learn, just add one more line that you decide what to do and what not to do. There's a lot, technology brings a lot of noise, to just focus on what you want to do and what you don't want to do. That will be my focus area.
From our side, it's more of increasing the operational efficiency through technology, right? Entering new markets and moving at a faster pace with the help of technology. That's one thing. Third thing is that do a lot of experimentation, right? As in, because with technology we can experiment with certain products, with micro-segmenting the customers and experimenting with them, and you can get a good product out of that. So a lot of experimentation is there. These are some of the three things I think that we are looking at for the time being. Thank you.
So I will echo to all the panel members that yes, innovation, spend some money on innovation and R&D, and you have buffet, pick whatever you used to eat.
Quickly, I think two things as per me. Keep your really minds open for the new technology or the product coming our way. Be a little experimentative. Keep your minds open. Be adaptive. Second, I think manage the risk properly. Lending is all about collecting money. As long as you manage the money, I think the risk management, I think you are going to scale it.
I think all of my panelists has well said. Whatever they have said, I will just only add, keep human face on top of that. Be it customer, be your employee. And what you have said, adaptive. Irrespective of the knowledge, energy, strength you are having, winner are those who are adaptive. That always be there. And the railway principle, Saavdhani hati, Durghatna ghati. Always be careful what you do, success will come. Passion, patience, perseverance, perspiration, and people connect. These are all 5 principles are the mantra for success. Thank you, friends. We have a wonderful...
Thank you so much. A big round of applause, ladies and gentlemen, to this wonderful panel here. And thank you to all the experts for their valuable suggestion, and special thanks to Devashankar Tripathi ji for wonderfully moderating this great panel of CXOs here. I would now like to call on stage Mr. Mandar Naware, CEO and co-founder from Flentas, to kindly do the honors of felicitating this great panel here. Thank you, Mandar. Mandar, will start with Mr. Ajit Menon first. Mr. Ajit Menon from Vivriti Capital. A big round of applause, ladies and gentlemen, to Mr. Ajit Menon for his wonderful contribution in this panel session. Moving next to Mr. Rohit Tiku from Abhiyan Capital. A big round of applause to Mr. Rohit Tiku for his wonderful contribution in the panel session. Moving next to Mr. Nitin Agrawal from AceN-Navadhan. A big round of applause to Nitin for his wonderful contribution in the panel. Moving next to Mr. Prashant Ahire from IIFL. A big round of applause to Prashant ji for his wonderful contribution in the panel session. Moving next to Mr. Dheeraj Mittal from Hiranandani Financial Services. A big round of applause for Dheeraj ji for his wonderful contribution in the panel session. Moving next to Mr. Karthikeyan Krishnaswamy from KreditBee. A big round of applause to Karthikeyan ji for his wonderful contribution in the panel. Moving next to Ms. Mandakini Kumari from Apollo Global Management. A big round of applause to Mandakini ji for a wonderful contribution in the panel session. Moving next to Mr. Chandan Mohapatra from the Muthoot Group. A big round of applause to Chandan ji for his wonderful contribution in the panel session. And now our honorable moderator, Mr. 𝐍𝐁𝐅𝐂 Tripathi from Aadhar Housing Finance. A big round of applause to Mr. Tripathi for not only moderating this panel but also for his valuable insights as well. Now I request the honorable panel members to kindly step forward for a group photograph, and Mandar, if you could also join them. So ladies and gentlemen, that was the final panel session of the day, the CXO panel on NBFC evolution. Technology is reshaping the NBFCs in India, and what a great panel we had in the last 55 minutes with these great experts. Thank you to all the panel members for their valuable insights.